Hello everyone and welcome back to day 2 of CogX 2020. We are now on the third session on the stage of future of fintech and financial services. So we've now got a panel lined up which will no doubt be full of energy called Banking for Gen Z. The moderator for this panel will be Bindi Karia. Can I welcome Bindi onto the screen?
Hi everyone, hope you're well this afternoon, and if you're in London, it's nice to see the sun finally coming out after a few gray days. Anyway, we've got an amazing panel here today, and we're going to talk about banking for Gen Z and indeed the next generation, and we have a panel of fantastic efforts. We're going to start with a 10-minute keynote from Louise Hill, who's the co-founder and COO of GoHenry, financial services for young kids. We've got Guy Rigden, the CEO of MyBnk, Laura Whateley, a journalist and author of Money, a User's Guide, and Eliza Filby, a speaker, a writer, and a consultant. So introducing Louise first in her keynote, she's the COO of GoHenry, a prepaid pocket money card and app that empowers young people to take part in the digital economy. GoHenry now has a community over 1 million customers in the US and UK, and that community fiercely believes that good money management is a vital life skill. Louise has got 20 years in commerce and operations as experience, and she was at the forefront prior to GoHenry of the retail industry's transition to digital, launching the first wave of e-commerce websites in the UK. So Next Directory, John Lewis, the Innovations Group, Debitums, and the like. And then I always like to get little unique characteristics of the speakers. And so Louise's great one, I love her this story, is she was one of Crowdcube's top female fundraisers, raising £12 million in 4 rounds on Crowdcube, including a chart-topping raise of £6 million in September 2018. Go Louise. So with that, I'll bring Louise in and get her to start with her thinking.
Thanks, Bindi, and hello, everybody, and thank you so much for joining us today. I am really going to challenge the amazing tech that we've got that's enabling this virtual conference and try and start this session with a poll. So this will also test whether you're all paying attention, I guess. Please see if you can answer the question, would you drop your kid in the deep end of a pool for the first time and expect them to swim? If you can answer that poll online now, that would be fantastic. I'm watching the results come in as you press your buzzers or you click your buttons. So, unsurprisingly, 82% of you said no. The few of you who said yes, maybe after this talk I'll go out and source some very urgent swimming armbands for you. The reason I asked that question is that, like swimming, money management, or financial fitness as I prefer to call it, is a vital life skill and one that is best taught young and with aids to ensure that when the next generation hits adulthood, they don't sink amongst all that access to credit and temptations that are out there. It's even more important as we move to an ever increasingly cashless society where people are using notes and coins less and less. Something we turn back to often at GoHenry to act as a benchmark is a big study done by Cambridge University, which showed that children's financial habits are formed by the age of 7, with most people forming core behaviours that they then take into adulthood and which affect the financial decisions they make during the rest of their lives. That's a pretty amazing statistic if you think about it, that children have learnt a huge amount about their financial habits by the age of 7. However, we still have 60% of children leaving school without any money management skills at all. And parents don't always have the confidence or the tools to teach money management from scratch themselves. So there's a big financial literacy gap to fill. And that's a gap that is being filled at the moment by financial apps like GoHenry, and also some amazing organisations working in schools, some charities and not-for-profit organisations working in schools to enable that learning. I founded GoHenry in 2012 when my two kids were, I think, 9 and 11, after realizing that there was nothing in society that was there to help me teach my kids how to be good with money. It all really started when everybody got iPods, or at least my kids and lots of other people's kids got iPods. And I know there's something that's been and gone now, but they all got iPods. Like a bit of an idiot, I attached my debit card to their iTunes accounts and also to my son's gaming account. And my two were merrily topping up their iTunes, spending money on gaming. And I realized that they really had no concept that this was spending money. I actually started printing out my iTunes bills and sticking them on the fridge door so that when they showed up in front of me on a Saturday morning with their hands out, I was able to explain to them why what was maybe their £4 pocket money was now only 50 pence. So that's really where it all started. And out of that, we built the world's first service to empower young people with freedom and confidence to use and understand money in a safe and cashless environment. We now, as Bindi mentioned, have over 1 million customers. We operate in the UK and the US, and our customers, like us, fiercely believe that being good with money is a vital life skill. I'm a firm believer that learning by doing is the best method of learning anything, and certainly the best way to learn life skills. I joked about learning to swim earlier. You can't teach the theory of swimming. You actually need to get into the water and learn it for yourself. And for me, I believe it's the same with money management. But financial education somehow isn't as exciting to a child as swimming might be. So you need to find a way to make them want to get into the pool, and to continue to use this analogy, to keep training. And that really is where Fintech can come in. So for children to understand the value of money and how to manage it, they need to be able to experience it in real life and to operate in the digital economy. If you think about it, children have been left behind in this area. They see us using cards, they see us taking out money at an ATM, shopping online, and yet before GoHenry, they had no way to learn how to manage money in that way. We need to give kids a way to experience financial independence, to think critically about money and how they spend it, and give them the means to spend it digitally in a safe way so that they can learn from their mistakes. Our CEO made a statement about a year ago, which I often refer back to, that a £20 mistake age 7 is way better than a £2,000 mistake when you're 27. And I have to say, big banks are really failing young people in this area. We were built by parents. We were built for parents. And now, as Bindi mentioned with our crowdfunding rounds, we're funded by parents. And our focus is entirely on improving financial fitness for the 16 to 18-year-old year groups. We do that by triggering positive conversations between parents and children about the 4 pillars of money management: earning, saving, spending, and giving to charity. Within GoHenry, we allow young people to earn pocket money from household chores and then to save it or spend it responsibly in a safe environment with no possibility of debt, no overdrawn accounts, and the parents always there ready to jump in via their own GoHenry app to help out if it's needed. Ultimately, what we're trying to do is make financial education fun and true to real life, and to help with the transition into adulthood, because kids who can't manage money grow, guess what, into adults who can't manage money. We know that children's attitudes and habits are formed as young as 7, and we also know that it's parents who influence those most strongly. We all know that debt's a huge problem for our society and that problems with money start early and spiral. Our customers tell us that there really aren't the practical resources out there to empower kids with these digital life skills, and that's really what we focus on doing. Whilst more and more schools are taking the opportunity to work with amazing charities like MyBnk to bring in interactive, expert-led financial education, more schools need to do that. And this needs to be supported by the hands-on practical experience that various financial apps can offer if we're really going to make a difference to the financial fitness of the next generation. Access to products like GoHenry from a young age enable kids to learn by doing and to think about their spending decisions. An interesting side effect of that is that it sets higher expectations for young people for a similar but transparent banking experience when they hit adulthood. So features like real-time notifications, an always available service, super easy to navigate apps, reasons in their notifications for wire transactions being declined, savings goals that they can set up, and donations to charity. These are services that our customers expect as standard when they hit 18, and that's not necessarily what's available in the market. Last summer, we launched our inaugural Youth Economy Report, which we built in conjunction with University College London, and that looked at the spending, saving, and earning habits of Generation Z. It's not a survey, it's actual data, and it's the biggest report ever created of its kind, based on over 75,000 children. And it provides some fascinating insight into how this age group is already feeding into the digital economy and improving their life skills. One of the most reassuring things, I think, for me out of that report is that Gen Z kids are saving. It showed that this age group are saving 13% of their earnings, which unbelievably is almost 3 times higher than the UK household savings rate. They're also grasping the power of earning. And something we've seen since schools closed their doors to coronavirus this year, parents at home are taking the opportunity to get more help around the house and keep their kids occupied. And we've seen some amazing increases in the chores feature on our app being used. The top ones, gardening jobs, have increased by 159%, and washing the car more than 85% during lockdown. And here's a stat to think about, all you parents who wonder if your kids will ever be tidy. Since we started in 2012, children across the UK have earned over £1 million just from tidying their bedrooms. So, whilst the current situation with COVID is accelerating the move to a cashless society, Generation Z is already leading that trend. According to our report, this generation almost always chooses to go cashless, and only 14% of the 6 to 18-year-olds' money was actually spent in cash. So, as well as being the first digital natives, Gen Z is likely to be the first cashless natives. And the societal shift that I think COVID-19 has created means more kids than ever will be participating in the digital economy. So to sum up, the key thing from our perspective is to make sure they're learning to manage their money from an early age, so that when they go out into the big wide world, they've got the financial fitness to keep afloat. So thank you for listening. I'm handing back to Bindi now.
Well, thank you, Louise. That is really interesting insights. I mean, the £1 million earned from tidying their bedrooms, that's quite incredible. I wonder how much they've earned for cooking dinner for the parents. I don't know if you've got a chore like that in the app, but, you know, it'll be good to see. And if so, I need to adopt someone's children for a bit. Anyway, with that, I'd like to invite the panel in. The production team, if you could bring the rest of the panel in, that would be fantastic. Slowly but surely, we're getting there. All right, we're all here. Fantastic. So what I'd like to do is start off with having each of the panelists introduce themselves. You now know Louise quite well. So with that, actually, Laura, can I get you to just do a quick introduction to yourself and who you are, and then we can dive into the questions after Eliza and Guy.
Sure. So hi, everyone. I'm Laura Whateley. I'm a journalist and author. I started my career about 12 years ago on the money section of the Times and was the Times Consumer Champion until last year. And in 2018, I wrote a book called Money: A User's Guide, which I wrote as a sort of handbook on personal finance that I wish I'd had and I'd read when I left school and university. And I wanted to gather everything I'd learned from writing for the Times about money and sort of democratise the subject so that young people who maybe don't feel confident enough about picking up a money section of a newspaper would be able to realise that personal finance isn't something that needs to be quite as complicated and jargon-filled as it can be. And it's been a surprise hit with Gen Z, younger people in their late teens, early 20s, who I think feel that they wish they'd learned some of this stuff at school. So I'm looking forward to a good discussion. I think it's a really important topic.
Excellent. And Guy, over to you.
Thank you, Bindi. I'm Guy Rigden. I'm CEO of MyBnk. We are a financial education charity. So with young people, we design, we develop, and we deliver with expert trainers that education in schools. That's half our work. And the other half of our work is with young adults in vulnerable circumstances. So they may be in care, they might be NEET, they might be single mothers. And since 2007, we've worked with around 250,000 young people. So what strikes me is there's clear support for meaningful financial education, but there's significant gaps in it. And why is that? And it's not, in my view, because there's a lack of resources. I think it's more there's a lack of opportunities or incentives or notice of when you would participate, whether it's at school, whether it's at home, whether it's directly seeking that out yourself to get the financial education you need. A couple of bits of good news. In our work, we find that around 70% of young people are pretty financially competent at the age appropriate level. But that means 30% are not, and that is a problem. We need to change that. And the second area I think is vital is for those that have to be good. And those are those vulnerable groups. So if you're in care and you don't have a network, I'm afraid that £20 mistake is going to be pretty serious because it's going to feed through to some pretty serious consequences. So you haven't got the luxury of a £2,000 mistake at that age. In our programs, we reference and use a lot of fintech services, comparison sites, best prices. But our experience has been, although Generation Z are digital natives, they're not savvy natives in proactively going out and using all the tools that are out there. I'm sure that will come out in the discussion. So for us, MyBnk, as I said, both the schools and the young adults, we start early, age 5, so setting appropriate habits, picking up what Louise says. Then we're working on prevention, and then key periods of transition is vital to us.
Great, thanks, Guy. And finally, Eliza.
Hi, good afternoon, everyone. I'm a historian and generations expert who specialises in looking at all generations, right from baby boomers, Gen X, millennials, Gen Z, as we're talking about today, but the generation after Gen Z, there is a generation called Generation Alpha, who are anyone born after 2010. It might be worth pointing out right now that actually, if we're defining Gen Z, the kind of classic demarcation is those born between 1997 through to 2010. And indeed, those after are called Generation Alpha. And I look at the way in which the different generations are developing their changing beliefs and behaviours and values, whether they are operating in the workplace, operating in the consumer space, or in just as citizens. And I really focus on the way in which the way in which the life cycle is really changing in the 21st century. And I think Generation Z really are the 21st century generation. They cannot remember the 20th century. Most of them can't remember 9/11. Indeed, most of them can't even really don't have a kind of memory of the 2008 financial crisis. And so, yes, they are digital natives, and yes, they are the social media generation. But I think also it's important to see and recognize and appreciate the way in which politics and the economic background in which they've grown up has really shaped them, and particularly their attitudes towards money as well. So if I was to describe Generation Z in 3 words, I'd call them savvy, skeptical, and serious. And I can elaborate and expand on that as we get deeper into the discussion. Thank you.
Amazing. Thanks, Liza. So I think that brings me really nicely into my first question, and I'll pose this to Louise and also Liza. I guess, what are the money lessons that we can learn from this generation? Because I guess to me, Gen Z are typically the kids of Gen X. And boy, I wish I'd learned a lot of this back in my day. So I guess, what are some of the lessons that we can learn, and how can they mentor us? So Louise, I'll start with you and then pass across to Liza.
I think I would pick up probably first on the point that Eliza made about them being quite a serious generation. What emerged from the research we did as part of our youth economy report is that they are very conscious of the value of money. Remember, some of them have grown up in the shadow of the 2008 recession, and they have an incredibly mature attitude towards money management. And I think we see that in the savings. I mentioned in my talk there that they're saving 3 times the current adult savings ratio, but they're also incredibly generous givers. So donations to our charity partner in the UK, which is the NSPCC, are significantly up during lockdown and have been strong ever since we launched it a year and a half ago. So I think they're quite a serious, conscious, reflective generation, actually, and that's something to learn from.
Excellent. And Liza, what are your thoughts? I mean, you are the generational expert, and maybe you can talk a little bit about how the generations differ in terms of their attitude to money, and why is Gen Z the one to look at?
So I think the obvious comparison and distinction should be made between millennials and Generation Z. And as a millennial myself, a very old, late millennial, fast approaching 40, I can really see how distinct and different Generation Z are from my cohort. I think if we were to learn from them, and if indeed millennials were to learn from them, I think you firstly got to appreciate how entrepreneurial they are, how savvy they are. You know, most of them have had a smartphone in their pockets since they were kind of in their early teens, and have had the world's marketplace and the world's knowledge at their disposal for a long period of their adolescence, and they've really capitalized on that. So they're savvy in how they're able to earn money in distinct and different ways. They're not getting traditional kind of teenage jobs like working in a bar or delivering a newspaper. They're sharing content, creating events, buying and selling goods online. So they're incredibly resilient and resourceful when it comes to earning money. I think also, as Louise has already mentioned, we can really learn from them in terms of how they're starting to save money and value money much in a much deeper and much more serious way than the millennial generation did. I think if we were to make a really stark and perhaps oversimplified point, is that millennials, if you like, grew up during the boom years. Their financial outlooks, their ambitions, and indeed their understanding of money was really shaped and carved in the boom years. Whereas Generation Z obviously grew up at a time, post 2008 crisis. They were the kids whose parents said, no, we can't afford it. They were the kids who witnessed their parents struggle, and indeed saw the economic fallout and followed by austerity years and indeed subsequent uncertainty surrounding the Brexit referendum. So they've had a really kind of uncertain economic time. And so therefore, it's no surprise to me that they're more likely to save money. I think also they're less reliant on their parents, and they're going to be as they get older. Millennials, as we know, really have gone to the bank of mum and dad for most of their, not only adolescence, but their early adult life. And, the bank of mum and dad are the 5th biggest mortgage lender in the UK. I just don't think that's going to be the case for Generation Z. They're not going to be able to be as reliant on mum and dad. And that's a good thing, I think. It makes them more responsible and indeed more mature with money. I think Louise is right, is that something quite admirable about them is they're very values driven. Mm-hmm. They're very conscious of ESG. They're very wary and distrustful of financial services generally, particularly established ones. And they want their money to align with their values. They want to buy products, invest in services, and use devices that actually align with their strong values. However, I do think there's things that we should be wary of when talking about Generation Z. I think, like millennials, and I think just society more generally, they're kind of immune to debt. And, you look at apps like Klarna and PayPal credit that enable these kids to get credit just in a couple of clicks. And in a way, as a society, and especially young people that are used to fintech being such a smooth process, they're almost immune to the responsibility of debt. And I find that quite worrying. I think they're also, because of the pressures of social media, just have a really distinct and intimate and quite damaging pressure on them to consume and buy certain products and look a certain way, and kind of they're not as consumerist as millennials, I think. But however, I do think that they are, in many ways, have experienced more pressure on them to buy certain things and to consume in a certain way. And I also worry about them in terms of how distinct and distant they are from the transaction. When everything is automated, when everything is a click away, it's such a different psychological transition and transaction than actually handing over cash. And I worry about that amongst young people, because it kind of dissolves the responsibility of that transaction the further away you are, or the easier it is to do it. So in that sense, I think there's much to learn from them, but I also feel that there is much to worry about.
So they're not all gold, in other words. I suppose some big lessons being learned in this current pandemic by every single generation. So that brings me really quite nicely to my next question, and I'll pose this to, I guess, Louise, Laura, or Guy. Where and how and why do you think the big banks are failing kids? Why is there this lack of trust that Eliza describes so succinctly? So I don't know which one wants to answer that. Maybe Laura?
Yeah, I mean, I think what you said, Eliza, about skeptical is really interesting, this generation. I think that a lot of big brands, especially financial services companies, I think there's two major problems. Firstly, they don't necessarily understand the priorities of the sort of life path of younger people. I think a lot of financial products are still based on this idea that you earn more the longer you work, that eventually you will retire, you will have a mortgage that you pay off, you have two sources of income. I think that's changing a lot, and financial services needs to catch up, and I think Fintech's done a much better job of that. I also think they haven't really tapped into how younger people communicate and consume information. Obviously, a lot of money information is now shared on social media. So you've got people sharing their debt stories on social media, on Instagram. You've got actually a lot of people seeking financial advice from their peers via social media. And I don't think banks have tapped into that. And I think you need to look at that. Does this pass the social media testing when it comes to skepticism? You look at the Black Lives Matters movement and the way that the hashtag's been shared this week. There's been a lot of brands sharing it without, understanding that they should also be sharing a photo of what their board looks like. That's all very well. It's all very well. Talking about diversity and inclusion, or talking about how you want to be down with the kids, but actually younger people can see through this stuff unless you really talk at all.
Yeah.
And I think, Guy, you had something you wanted to say.
Yeah, I think it's ironic in some ways that I think we work, as I said before, with a lot of young adults in difficult circumstances without much money that you would expect would not trust the banks. And the answer is, they really do trust the banks, but they trust the banks to look after their money and not have it stolen. But they don't trust the banks to offer them any sort of independent advice about products and so on. So I'd say in some ways the banks are failing themselves in seeing the opportunity that there is with Generation Z, rather than as a basic service that really, what do we want of a bank? Please don't lose our money and please allow us to make some transactions. I think they do that and they're trusted for that.
Yeah. And Louise, I suppose that kind of is the whole reason of the genesis of GoHenry. So kind of what are some of the insights you've built about why the big banks are failing kids?
Well, I think Guy and Laura are absolutely right in what they say about banks are great for housing your money. But if you look at the younger age group, if you look at, Guy says his organisation starts to work with 5-year-olds, we happen to start to work with 6-year-olds. If you're a 6-year-old, you can have a savings account at a big bank, but actually there's no way where you can't have a digital log on to your bank account. You can't have a card of any sort. You can't learn start to learn to use money in the way that children are actually using money today. And, you know, the really where the whole concept came from, when my kids couldn't buy their own iTunes downloads. So I had to give them my credit card or my debit card. And then they weren't learning that it was spending money, because it wasn't disappearing from their pot. So, you know, it is on a number of levels. I think Guy's absolutely right. Banks do a great job at housing money, but they don't actually give the younger group of children in particular the ability to handle it in the way that they want to use it and they need to use it in modern society.
Okay, well, that brings me nicely into another question around, I guess, the products that the banks offer. So adult financial services product. How do you think the products need to change to meet the expectations of Gen Z? Because clearly you've done that with your product in GoHenry, and Guy, no doubt you've seen quite a few. But what do the banks need to do? Because it sounds like, you know, Gen Z over time is really going to be determining a lot of these financial services. So maybe Guy, I'll start with you, and then I know Laura, you had some thoughts as well.
Yeah, I think with the banks, what they've got to build, I think, is this basic trust in that we will hold your money and we will transact things for you. I think they need to be much clearer in what they can offer that is of use to Generation Z in a sort of clear framework that they can interpret it. So part of that clears in terms of the services and the add-ons that you'll see in mobile banking that is coming. You know, some of that is good. Part of that, I think, is in services that help you develop the sort of behaviors that you want to develop. So a savings habit. So you can clearly use nudge type applications, rounding up the 99p to the pound, putting into what you want to do and so on to help you to achieve your goals. So I don't think it's that challenging in itself. I think it's more that they've got to shake off the fact that historically, when you've gone to a bank, you felt that you're being pushed into products and services that perhaps are benefiting their bottom line, but not necessarily benefiting what the young person themselves needs.
Yeah, I mean, that infamous word cross-selling, you know, the banking 101 term. I mean, Laura, what's your perspective on it?
I think there's too many products, and that's really, really overwhelming. I know a lot of young people say to me that they just don't understand the area of personal finance, for example, because it feels so complicated. There's so much to choose from. It's really, really impossible to, you know, compare the different overdrafts that are available or compare the different things that are being sold to you. So I think simplification is really important. I think that's what fintech does very well, is makes it feel more straightforward and, you know, cuts out some of that overwhelm, which I think makes people distrustful of banks or of the big old-fashioned banks, because I think people think they're being, you know, sold something that isn't suitable because they can't see, you know, the wood for the trees, basically. I also think there needs to be more understanding of the way young people earn, spend, and want to manage their money and what their financial priorities are. We're going to enter another really, really difficult financial situation after the pandemic, which will disproportionately affect young people. And people are learning less money, younger people proportionally, but housing is getting more and more expensive. A lot of people can't afford to buy a property. A lot of people don't have the help of the bank of mum and dad, even though a lot of bank products are sold to parents rather than to children. So I think, you know, there needs to be a link up with the way, you know, more people are self-employed, more people are freelance, because they have to be. So there needs to be better acknowledgement of that, I think.
Yeah, and then I think that sort of brings me nicely to the other observation is, to me, that shows that fintech allows them to do things that haven't been possible before. So Louise, for example, the fact that your children could get a debit card and they knew the exact amount of money that was put in there because you put it in there and they earned it through their chores. But can any of you guys give me examples of fintech that allows for the Gen Z to operate, I guess, in the ways that they like to? So would any of the panelists like to sort of stick their hand up and tell me what you think? Okay.
So, I mean, obviously, when I'm talking about Gen Z, I'm talking because the people who read my book tend to be people who are students or earning money. But a lot of them want to save, and I think savings accounts, they've got rubbish rates, they're old-fashioned. A lot of the savings accounts offered by banks. Fintech have found a way of gamifying savings, so making it much easier to save without noticing. And I think understanding that money is emotional, and that sometimes people don't act rationally, they need help, like I was saying, nudges. And so things like Chip, Plum, apps that help you save without really thinking about it too much are really, really good, I think, really successful.
Yeah, those are the roundup ones. Anyone else? Louise, you must have some thoughts about some great fintechs out there that really help build these kind of product sets.
Yes, I was actually going to give Monzo as an example, because that as one of the challenger banks, they certainly allow you to set up separate savings pots and very easily move your money between them, and do the round up to the nearest pound savings as well. I was going to give you an example. My daughter, who's my oldest child, she obviously grew up on GoHenry, and when she hit 18, she didn't have a standard high street bank account, and we managed to find an old high street bank account that had been opened for her when she was very young, and they gave her a debit card and a digital login, etc. And oh my goodness, to this day, I wish I'd videoed her, because one weekend she was in the house in the evening, and she checked her bank account because she knew her Spotify subscription was going out the next morning, and she had enough money. And then the next morning, chaos broke loose because she'd gone overdrawn. And this is because the bank had shown her balance at close of play on Friday, not her immediate balance. And she'd grown up used to getting, every time she spent something, getting a little ping on her phone going, hey, you just spent $4.99 at New Look, your new balance is X. And she was outraged, because she said to me at the time, the bank can do that, but they choose not to.
Yeah.
And that's kind of an example of expectations that are set, and you know, they're used to instant, real time, pretty much everything. If I not necessarily
I think Eliza actually had something to say, so I'll pass over to you, Eliza.
Two areas where I think Generation Z are really wanting and desiring something different, not just actually from the high street banks, but I think also the challenging banks. Is the first thing is they really are prosumers, and what I mean by that is they are entrepreneurial business people that are making money in different ways and are looking for a much more fluid and much more helpful and approachable business banking system in order to help them build those entrepreneurial activities. So I think that really arbitrary distinction between personal banking and business banking that dominates the high street really needs disrupting. And the second thing I think is really important is student finance, because again, they work and operate on really old models dominated by high street bank offerings. And actually, again, how people are thinking about their degree, thinking about student fees and earning whilst doing the degree, I think is really going to change over the next 5 to 10 years. And I think there's a huge opportunity there for challenger banks or fintech apps to really tap into that Gen Z market.
Yeah, I think very, very good insights. And I think, you know, payments is something certainly ripe for disruption based on how entrepreneurial this generation is. So Guy, I wanted to find sort of end with this question to you. How do we ensure, and actually I'd like everybody to pitch in once we've heard from Guy, how do we ensure that all children and young people overall get access to the appropriate financial education when they need it? So Guy, I mean, this is what your charity does, and can you sort of talk about that? And then if very quickly, I'd love the rest of you, Louise, Laura, Eliza, to come back with some of your high-level thoughts as well.
Yeah, thank you, Bindi. I think that's a great question. But one thing I'd refer to the very powerful speech that Louise did at the beginning about GoHenry. But why does GoHenry work? I think it works because it's part of an ecosystem. It's got a system to get the young person to participate in that education in the first place. Their parents are supporting it. So the parents worry about it. The kids want to go to this system because after all, that's where their money is. Why wouldn't you? Because your money's there.
Yeah.
the parents, again, have facilitated an opportunity to make more money through chores, to get birthday money through Auntie Lucy or whoever else it might be, and have set rules around what they do. All of these things link into good financial education. But unplug the parent, it looks a lot more challenging now because no one's paying for this service. So the first thing is you've got to have a reason for the young person to participate. So for us, we might go through schools or youth organization because that's where they are. And you can, if you like, to some extent, coerce them into doing this because it's part of their lesson. So you need to reach them that way. The other way you might want to do it, which frankly is the most attractive way, is can you attract them? Can you make them realize what it is they don't know when they need to know it and when they need to know it before it actually hits them in the face? And that is really challenging. And I think that's something that you need a lot more collaboration and cooperation to do. So for example, for us, we concentrate in areas, habits very early, and then you go into those that need it most, that cannot afford to make those mistakes. And the honest answer, we would link in with the local authority, a care team, with the young people themselves, with the social worker. We do everything we can to say this is going to be good for you and it's not going to be a scary experience. But we're also linking with the local authority. They're going to mandate it. If you want to get on that social housing ladder, you might need to do this. The end result is for them a much, much better experience. They don't get into debt, they don't lose their house and so on. So I think you need a range of approaches to get to everyone.
Yeah, and I really like that ecosystem comment because it's absolutely true. It's the fintech, it's the parents, it's the schools, it's the housing authorities, it's the council, it's everybody that's getting involved in this young education. I'd love a final word from each of the three of you ladies. I think, Guy, that was really brilliant in terms of insight. So why don't we start with you, Eliza?
I think one of the interesting statistics, if you look at where Gen Z goes for their financial advice, it's predominantly their parents, and I'm sort of skeptical of educational institutions in the way they tend to make everything boring and unexciting, and I do worry about this kind of institutionalized financial education curriculum for kids that might end up putting them off money management and financial matters entirely. And I think parents have real agency on this front. And I think you're seeing already, and I think this needs to grow and grow and grow, that whereas before parents, have really learnt how to talk to their kids about proper conduct and the dangers of social interactions online, now they're starting to talk about their, proper conduct, responsible behavior with financial matters online. And I think those conversations within families are where the kind of should be the kind of really pulse of financial education really happens.
Yeah, and obviously with pandemic and everybody, forced to be together 24/7, I think this is the absolute ideal time to do that. Laura, what are your final thoughts?
I would say the only downside or problem with parents teaching their kids about money is that parents often don't know very much about money and personal finance either. And I think we all have our own emotional relationship with money. And I think there's a danger sometimes of passing on, for example, a real fear of debt, which can mean that people don't understand the benefits of student loans. So I think parents need to educate themselves too about money. And I think, but I agree with Eliza that often we learn best from our peers and from the way that we share information. And I think that happens a lot with, younger people and their friends. They talk about money together. They share, like I was saying, debt stories on Instagram. So I think informal social media, looking into the places that young people consume information and news and how that's changing is very important.
Yeah, great. Thank you. Laura, Louise, final 30 seconds for you. And then after that, we will wrap up. So, Louise, final 30 seconds.
Thanks, Bindi. I think I'm going to go back to the phrase that Guy used about ecosystem. I think the more opportunities there are, the more tools that there are, the more information that there is out there for young people to access, and for their parents to access, and for any support networks that might be around them to access, then the better. Fintech is a part of it. The kind of work that Guy and the team at MyBnk are doing is part of it. Laura, journalists writing in the press, writing books, writing on social media is part of it. And insight, it's all important, and it does work together as an ecosystem to provide the information, and the more that's available, the better it is.
Yeah, and with that, those are brilliant concluding words, because to me, each of you represent elements of that ecosystem, and, you know, thinking around that ecosystem and how it works. And I guess I've gone equipped going, I need to find some Gen Zs to learn from. So with that, I'd like to bring Amy back in to let us know what's next.
Brilliant. And thank you all so much for that panel. It was really interesting, really engaging, and yeah, it's so important to focus on that education and empowering the next generation. So thank you all. I'm sure there's plenty of questions from the audience. So those of you that do have the correct tickets, you can head over to the speaker Q&A room. They'll be starting shortly, about 4 o'clock. For everyone else, there is about an hour break, and the next session is at 5 p.m. So I will see you then.
Want access to more CogX videos? Subscribe now for free at cogx.co.